Hey, what's going on, my friends? It's your man Adam A. Spencer here with another dividend portfolio update. With this dividend portfolio, we contribute $25 every week, regardless of how well or how bad the economy is doing. And so, if you're someone who is not maybe, the best investor, or maybe you're new to investing, you're a beginner investor, you're not really sure where to start, or people are like, oh, this is the bottom of the market, of this bear market, meaning the market's going down, it's been kind of bad. People are like, this is the bottom, you should throw all your money here. That's not always the best move, simply because we don't know when we are at the bottom. We may have potentially seen the bottom of this bear market, and things have started to or continue to move forward, move up over the past 2 days, pretty much, since 3 days, since I'm posting this on Sunday, of course. But Thursday and Friday of last week really showed a lot of the gains that we've seen over the past week and whatnot. So if you were someone who panic sold prior to Thursday and Friday, then you would have missed out on a lot of the gains that the market is seeing right now. And so again, this could be potentially a strong indication that, we saw the bottom and the reversal is here. Or this could be kind of a little fake out, kind of a little consolidation period. We saw a bottom, it started to run up a little bit, it's going to consolidate a bit, and maybe it continues to go down. We don't really know. And that's why taking this dollar cost strategy, where we continue to invest $25 every week, regardless of how the market is doing, so that we can benefit from the lows, but also the highs. Because again, what might seem high today might be low in a year from now. So as you guys can see right now, jumping right into it, we are up 1.49% over the past day. Over the past week, we are up 4.80%. However, over the past month, we're down 0.72%. Over the past quarter, we're down 3.42%. 1 year, we're down 7.51%. And all time, we're down 1.45%. So we started this portfolio back on February 1st, 2021 with $100, and really pretty much have been consistently investing or contributing $25 every week. Now, we did have this 1 week here back on March 5th, one day, where we contributed an extra $500. This was extra money that we came across. So if you're someone out there, you got a new, you're picking up a side hustle and you get some extra money, consider throwing that extra money into your portfolio. Maybe you get a raise with your job. Consider adding some of that extra money to your portfolio. Or you just stumble across some money. You decided to do a scratch ticket for once. You shouldn't, but you did. You hit some extra money. Throw it in your portfolio. As a result of doing that, it propelled us from this $200 range up to $734. And again, we've just been continuing to consecutively and consistently invest $25 every week, regardless of how good, how bad the market is doing. And you can really see at times where things will just kind of just keep moving up, but then we hit like a plateau period where it just levels out. It's a little rocky, a little bumpy, but then we've continued to move up. Then we hit another little level period. It was really bumpy recently, but again, over the past few days, we continue to move up and really make gains from a lot of those losses that we had kind of started to see. This is why taking this dollar cost averaging strategy, where we just continue to invest every week, is, as you can see, a pretty effective approach. And being that we are investing in dividend companies, well, we're not entirely and only relying on the market gain, meaning the price of the stock, for us to make our money. We still make money because of the dividends that they are paying us. So when we scroll down and look and see who is performing well from a stock standpoint, you can see at the top of the list, which we've seen these companies kind of again and again continuing to demonstrate why they are reliable and why we have them in this portfolio, is Coca-Cola, who is up 36.88%. Then we have Pepsi, up 32.23%, followed by Johnson & Johnson, up 20.73%. Realty Income Corp, our first REIT, is up 17.69%. Procter & Gamble, up 15.61%. And our second REIT, Newtek, is up 5.75%. Then in the red, unfortunately, we have Verizon Communications, who is down 1.59%. JP Morgan Chase, down 16%. 3M, down 20.83%. And our third REIT, which is Innovative Industrial Properties, is down 47.73%. So as you can see, we got some red, we got some green, but mostly green in our this portfolio, our dividend portfolio. So this is really good. This is fantastic news and exactly what you want to see. Our market gain all time is negative $100.87, meaning the price of our stocks that we have on average, it's only down $100 basically. Now, not only in this portfolio, that's a month worth of contributions, but it could certainly be worse because as you see, our earned dividends has paid us $80.05, which gives us a gain of negative $20.82 for our full portfolio, leaving us with a current value of $2,305.56. Again, we started this just with $100 and now we're currently sitting over $2,000. Despite being down 1.45%, hey, I'm pumped with this. I'm amped with this and I'm loving it because the market is horrible right now. And yet we have still been able to grow our money with a little amount of money. That's the key thing. And just being consistent. Too many people don't believe you can grow your money and that you need to have a fortune or you need to start with $1 million. Yeah, if you want to see crazy dividends where you're getting paid, this much money every week or every day, yeah, of course, you certainly need a lot more money. But if you're balling on a budget, if you are new to investing, if you're a beginner investor, you're not sure where to start, or you're a little iffy, I mean, taking this type of approach where you are investing in dividend companies that are proven value-based companies, it's not a bad approach, not a bad idea. Some people are against it. They say, oh, you'll make more just focus on growth. But as you guys can see with our growth portfolio update that I posted yesterday, that portfolio is still getting hammered pretty badly. Whereas us over here with our dividend portfolio, it ain't doing too bad. It ain't doing too bad. So when we look at our earned dividends, you can see Newtek is still at the top of the list, who has paid us $20.38, followed by Verizon Communications, who has paid us $9.27, and then Realty Income, who paid us $7.90. So out of the top three most paid dividend stocks we have inside of our growth dividend portfolio is our two REITs. You have Newtek as well as Realty Income Corp. Two different REITs that have paid us the most when it comes to our dividends. So, hey, REITs might be a good option, but remember, the stock price of those REITs might also be getting hit pretty badly, or at least it might fluctuate a bit more than regular stocks. But again, right now, our top four plays, you can see at the fourth position is Realty Income, one of our REITs, and then our second REIT here, who's still in the green, is Newtek. So REITs have been doing pretty well for us, along with, you can see these kind of, Coca-Cola and Pepsi and, Procter & Gamble, Johnson & Johnson, a lot of companies that are, they're going to be around for a bit. I have a feeling they'll probably be here longer. Good chance all, these companies will be here longer than any of us watching this video. I don't know about Realty Income Corp. That might be a little iffy. Maybe Newtek could be iffy. Maybe not, though. Coca-Cola, Pepsi, Johnson & Johnson, Procter & Gamble, I have a good chance they'll be around for years to come. And that's why we continue to invest $25 every week in this portfolio, regardless of how good or how bad the market is doing. And like I said, our current value sits over $2,300. I am loving it. And I hope you guys are getting motivated by this. The market has been horrible, but yet we have still been over here able to grow our portfolio. And that's what it's all about: making, managing, and growing your money. So if you guys want to also get started with growing your money, I do have some links down below where you can open and fund your own account with M1 Finance. And if you use my referral link, fund your account with like $100, they will hook you up with some free cash that you can then go and invest in your dividend portfolio and get this cycle going for you. Get the ball rolling where you can grow your money as well. So my friends, hey, I got to wrap it up there. I got to keep it moving. I do have some other videos that you should consider checking out, like this one down below over here, if you want to learn how to make, manage, and grow your money as well. But all right, my friends, much appreciation for watching. You already know I gotta keep it moving, but I'll see you in the next video. Peace.